Today is December 23rd, 2018. I'm your host, Peter Resnicek, and this is another edition of the ShadowTrader Video Weekly. Title of this week's video, Where's the Bottom? Markets have come off a huge amount in the last few weeks, and this video is going to deal specifically with where technical support is in the S&P, Dow, Nasdaq, and Russell. Not as far away as you may think, but I think we still have a little bit further to fall before we hit those supports. So without further ado, let's get into it.
All right, so starting with these monthlies here, as I was saying, of all the major averages, the monthly chart is the one that's going to show us the cleanest picture of where support is, and we're going to start from the 2009 lows. And you can see here we anchor to here around sometime in late 2011, and we anchor again here, and that's what's going to take us basically out to here. This is the longer-term trend line here in the S&P, which is around 2200. Now this one here that starts from this level, this is a shorter term one. You can see here is the anchor here to the early 2016, and that takes us to a little bit higher. So just to be clear, this is around 2300 and this is around 2200. So we could see some support come in on that shorter term trend line, but really the main event here is that we probably retrace all the way to the longer term trend line. And this is very, very important because this is essentially the way to define the rally. The rally is defined from the lowest low to the highest high. And from the financial crisis that ended in March of 2009 at the 666 low in the S&P, that's where we're starting from. We're going all the way out to here. So you can see we've got a good deal of ways to go. Obviously, the market stopped just over 2400. We will probably make it all the way to 23 or 2200. So expect about another 100 to 200 points lower in the SPX. All right, let's take a look at some others now. Let's go over to the Dow. Not an index that we talk about all that often, but again, same anchor points. Here we have this. Move this over. Starting here, taking us to here, and where does that put us? Well, actually sub 20,000, probably around 19,000 in the Dow, so that's quite a ways to fall. But as I always say, it is the index that we pay attention to least because of the only 30 stocks in there. Let's take a look at Nasdaq 100, NDX. This one is probably the index that I pay attention to most. It has an extremely large amount of movement left in it to fall. We parked ourselves around the 6,000 level here on the low this week. The low actually is 6,013. The shorter term trend line comes to about 5,100, and this one here at about 4783. Now obviously over time these will rise. More than likely the round number 5,000 is going to be important. Notice also that it ties in with this prior high. Just about. A little bit lower. Here's this consolidation as well that ties in better. So there's a launch point here where you have a prior resistance becoming new support. That's certainly a possibility. Last but not least, let's take a look at the rut. Remember, the rut does tend to act as a leader, and I think it's going to lead here as well because notice that we are closer than the others, not too far away, and same anchor points. We start here at the 2009 low. Swing out method means just swing it all the way out, go to the first touch. First touch is going to be out here, and it takes us out here. And interestingly enough, what does this correspond to? Well, look at the round number, 1200. And more importantly, look at all the value here, right? Where there's chop and congestion, that's where value is, right? Because that is where lots of time has been spent. And as we know, price plus time equals value. That's the most important theory of market profile. So that's probably where the rut is going to go to. All right. Also, last but not least, just to end it on where we started with the SPX, I just wanted to point out that the box situation that I talked about actually has come true pretty perfectly when I said that the box area was about this 200 point range from 2800 to 2600, and that then we would go equal the box would put us 2600 to 2400. And that's basically there. And as you can see, we're almost there. We haven't fallen the full 200 points yet. We've got a little ways to go. But I believe that the market actually will come further than that. We will break the 2400 and we'll see at least the 23 or the 22. And part of the reason for that is because of the concept of the wagon wheel running fastest at the bottom of the hill. That's how it is. selling begets selling, and it feeds upon itself. And the panic is always the greatest at the lows. The people always make the most irrational trading decisions at the very lows, and that's because there are no sellers left at that point, because everybody has made this irrational decision at the same time where they just can't take the pain anymore. And hence, when those sellers are finally out, then there's nothing left, and the market only has one other way to go, which would be back up.
All right, that's it for this week. Keeping it a little bit short this week, I really just wanted to focus on these supports. I figured this is the question that's on everybody's mind, where is the bottom? So I really just wanted to stick to that. Next week, we'll have a much longer video. It will be the last video of the year, so I'm going to do a huge 2018 recap, where we're going to look at longer-term charts of all of these same major averages, but also FANG stocks, some IBD 50 stocks, and also go through the entire ShadowTrader core sector list using the monthly charts and see where we're at going into 2019. So I look forward to that. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, Merry Christmas. I wish you good trading and good night.